Let's take a look at the internal momentum pictures. These are really important to note because it will give us, or would probably point us to the next rejection point. Most now important for us are the 1 hour and the daily charts. So this is our 1 hour chart here. We are about to do either a zero rejection. You're looking at momentum. It's very important to note it. You're looking at momentum. We're either about to do a zero rejection or a degree 1. All right, so let's say we have a positive feed out of the 15 minutes and a positive feed out of the half hour. So both of the feeds into the 1 hour are positive, so the market will keep going up. We know that if this is going to do a degree 1, we can deduce it's going to the next neckline. So now it depends where that next neckline is. The most probable, the most probable candidate is this green neckline here, 112.5. There's also possibility to top at that gray one, 117. You have that level 3. So having actually two necklines, we are right now supporting on this lower neckline. We're going to either 112.5 or 117, depending on our momentum plot. Again, the important confirmation that we get out of charts today is a smaller time frame charts. This is the 15 and the half hour chart, is that so long as the positive momentum feed out of both will feed into the 1 hour, it cannot go anywhere else except feed into the 1 hour, it will push 1 hour momentum up. This would mean that the 1 hour momentum here showing is going to be doing a degree 1. Any degree 1 should contest the neckline. If we have taken out that dotted white neckline, we're now supporting on it very strongly. You can see we're going to that green neckline, 112.3, 112.5. all right, we may even go a bit higher to that other neckline, 117, but the most immediate target is 112.5. if we relate this to fib levels, we're having these fib projections here, right from the bottom of level 2 all the way up to the level 3. We're really going to 114.12, which is 61.8. If we fall back to actually a support, we are going to support at 109.38. okay, so let's get back now to trade management. We have investigated the bias thoroughly and it is long. We have good momentum to show that the market will be continuing higher. All right, so let's take a look at our trade management. What would we do if we're not already into this market? How to get in? So if we are into this market, we are not going to consider closing out until we get to 114. Yes, and if there's still positive momentum at that point, we may consider we are holding to 117. These are the next coming necklines. If you're not already in the market, this is a 30-minute chart. We're going to be using this. The count here is probably correct. We expect the current wave 3, this 3 here in red, you're having the 1, 2, and of course a 3. Okay, so that wave 3, we had a very strong wave 1. That wave 3 should actually take you to this neckline. We believe it will take you even a bit higher because it will do a fib projection or fib extension, I'm sorry, of level 1. So we have a level 1 here, all right, and if you're using fib projection from the bottom of the market all the way to level 1, a wave 3, if it is going, looks like it will probably take out that resistance at level 1 here. The wave 3 will take you to 161.8. it will take you to this neckline, 111.10. at that point we get a rejection. We want to buy the top of level 1. There is a neckline here, of course. All right, so what you're going to be seeing is a move all the way to 111 or 111 plus, and then we get a correction. This actually is a shoulder, so it's going to be some kind of a triple move. You have an A, something like an A, and then a B, and then a C, and finally we could expect to break out higher at this level. B is going all the way up to 118. all right, so our best entry point if you wanted to join the market is to wait for that correction. There's going to be a correction 4. Let's use that 4 now. It will take us back to 107, 106.34. We're looking at a bounce at level 1. We are also looking at a bounce at that internal level 1. We're looking at that very small internal level 1 here, 105.5 and 106. So going in at 106 should really work. We'll probably get an entry at 106. We expect there's going to be a correction, so there is no need to really chase the market. If you wish to get in earlier, seriously, and you are not already in the market, you would investigate, we would investigate this basic formation here. Let's take it to very smaller time frames. If you have reason to believe that the market is just going to take off suddenly, very strongly, what you're seeing here is a 3 and a 4A, 4B, 4A, B, C, the market goes up. This market is not going to fall below this point at this time, 107.6. So if you really wanted to get into the market, you could consider to buy half size at that level. Right now we're 108, so we would consider, for instance, to go in at 107.9, 107.88 half size, add the remaining half size at 106. All right, and we take this to the next neckline. Next neckline is of course going to be that neckline that we're showing on the 30-minute chart. So this is the 30-minute chart. We're looking at the next neckline that is of relevance really for us is 113 and then 117. Next tradable necklines. You're moving of course inside of an Elliott channel, and that takes you to 121 gradually. Okay, so the bounce is valid. To recap now, if you're already in the market, you would hold. We're looking for targets between 114 intermediate term and 117 and 118. Even we can go as high as 121 if the momentum picture on the 1-hour chart becomes actually positive. Now, if we are not in the market altogether, we may consider to buy at 108. Right now the market is 108.29, possibly even to get levels at 107.9 and 107.85 half size, and add at 106. We're looking here at 105.4. we would consider to add at 106. All right, or add when you get any correction. You wait for the correction in that wave 4. Remember, this could be an A, B, and a C, and then we have an A, B, and a C. We could go down to these levels, 102 and 103. So it's better to have some money in reserve in order, if you get to see lower levels, we are prepared. We only buy high levels because we also want to be prepared in case the market breaks out immediately higher. If there's going to be an opaque meeting, actually the Saudis are going to be buying before the meeting, really, in order to support prices. This is the usual practice. This is why you have probably a rise in prices today. Again, this is the usual practice. So we would consider also to buy upfront. We're going with the flow because this can take prices at least 214 before we get that degree 3 correction. That degree 4 correction. If you want to consider this as an A and a B and a C in the first place, then we can get back to levels of 102 and 103. Buying at 108, you would need to have a stop probably, or a hedge if you wish, just below level 2 here, comes in at 104.5. If you're already long, of course, at 100 and 100.5, you would want to have a stop loss at entry to secure the position.